Just doing a little video here about engulfing. We get asked a lot what exactly engulfing is, so here's where I'm going to clear it up. Well, here we have the Euro USD M15, and I've overlaid the H4 candles onto the chart. So anywhere you see these bigger candles, they're H4. Now, here we have an engulfing candle. We see that there's a little candle here, and that is engulfed higher and lower. That's a bearish engulfing outside bar. Now, a lot of people will see this as significant in itself, an engulfing bar. Now let's see what it's all about. Well, what you have here, you'll see, is a big price action zone up above. Price has been on top of a pole here. It's got demand here. It's got support from that demand. And then the demand gets tried a couple of times. Now what happens? Price breaks out of that price action zone and tries to get back in. Now it has a flag here, and then it goes very bullish, but that bullish bar in itself gets engulfed down and price breaks out of there. So when price gets back to this engulfing candle, it comes back over here. What does price react to? Does it react to the low of the candle, to the close of the candle, to the open of the candle, or the high of the candle? Well, the candle itself is significant in saying you've had an engulf, but where it reacts to is not necessarily to do with the candle. It is to do with demand here on top of this pole, support here, support here. So you have support and support all along this line at the base of this PA zone. Price trying to get back in. You have a decision to break that support, and down price goes out of that PA zone. Now price comes back up to the engulf. It doesn't react to the candle. It reacts to the decision. The price is too expensive and it's not getting back in, and it comes down. So you have the break, and then you have a rally, a base, and a drop. So you have support, decision to break support, and resistance. That's simply what that is. You have your engulf, but it's all support and resistance, supply and demand. Now we'll go into a lower time frame here. As you see, you have your support here, which is demand. The demand gets broken. Price flags. After it breaks, price gets very bullish, tries to get back up into the zone as well, and it's rejected. It's engulfed here. This demand here gets engulfed, and price goes down and down and down. And then when price gets back, it comes to that decision point, which of course was old demand and old support, and it simply becomes resistance. And then price breaks this demand here. Down it comes, engulfs that demand, and back up again. It comes up to the decision to break through that demand right here, and down it goes. Now, looking at the H4 here again, you have another engulfing candle. This is a bearish engulfing outside bar. See, the high is higher and the low is lower, and it closes below. Now that is another engulfing bar. That's significant in itself. So price engulfs this last bar, but what does it really engulf? What are we looking at? Is it just that it's engulfing this candle, or is it that price has engulfed an entire zone? We have our last demand here, and what we have is price engulfing that demand. Do you see it breaks the low of the demand, comes back in again, it gets bullish here again, and shoots back down. So it tried to get back in, was an epic fail, and price goes. Now, where did price go to on that after this engulf? Well, it went down to demand. Let's go out into the H1 and see this. There's where price went down to. We had a big pole up, we had a flag here. So at the base of the flag there was support, at the top of the flag there was resistance. The resistance, once price breaks, becomes demand. So price came down to that demand and engulfed back up again from that demand. Okay, back we go. Now, okay, we have our engulf, and then we have price going down to demand. Price came down in a 1, 2, 3 drive there, and came back in under the big round number again, picked up a number of sellers so that it had a lot to buy against, and price shot up and engulfed this zone, as you'd expect, because it's a beautiful demand that's there. It's a beautiful resistance becoming support from the past. So price got back up, and where did it get to? It got to the base of this candle. But is it this candle that's the important thing, or is it that this demand had been engulfed? It's just that this demand had been engulfed. Price tried to get back in, got bullish and broke back down again. So where the decision was made to break back down is the important part. So here's a flag and a breakdown. So price came back down. And where did it come back down to? It came back to the last engulf. Oh, excuse me. Here is a very clean supply that got engulfed. So it went back to the last engulf of this, shot back down to the engulf of this lovely supply, and back up. Now, in order for price to move on, it will so very often come back to the source of the move. Now, the source of the move is here. You can see that price engulfed this demand, came back in, tried to get back in, and got rejected here. So if you'll see on the 1 minute here that you had your engulf of this zone, you had a flag up, and price tried to get back in but failed miserably. You had another engulf down here. So at the source of the move, that was the target for the longs there. Price wanted to get back up to the origin before it moved away. Here you'll see the 3 drive down. You've got 1 drive, 2 drives, 3 drives. Price made a beautiful base here in M1 and came back up to take out sell orders which were there, which would be getting in the way. Came down, sat on top of this base, and went away again back to the origin of the move perfectly. Here you'll see where price hit the H4 engulfing candle, which was actually it just hitting the decision to engulf the previous demand zone and failed to get back in. So that's simply that. The decision was made there. The price wasn't getting back in. When price hit that again, it came back down to the decision to break through this nice supply zone. You'll see here why it reacted just there. You had price trying to reject from this supply. You'll see all these candles going up. They look like rejection after rejection, but they're not. They're actually consumption of all of the sell orders that were here, and you'll see the price failed to get back down here after this last candle and actually shot up. So there was a decision to fail, or a decision for the bears to fail here. So where price got back to that decision for the bears to fail, it just shot up. So right back up to the target, which was the origin of the move. So from the origin, So from the origin of the move, price was able to get back down and move on. There it is, price hitting the origin, and back down it went. Now, here we have another engulf that I'll show you. It's not necessarily an engulfing candle, it's simply an engulf. You see this old demand, which was on top of the pole. This flag was on top of the pole, and this held price up beautifully before. Now, after price got back up to the origin of this down move, it shot down and engulfed this whole zone. It broke it down. You see, it broke down underneath the demand there, came back in to where price had been supported, and now it became resistance, and down it came. So price, as we say, had broken down. It sat on a resistance and came back up. Where did it come up to? It came up to where this zone had been engulfed. Here was the decision. The price wasn't getting back in, so price came back up to the origin of the move. There is your rally base drop. Price came back up to the origin of the move, and before it could shoot down again, and it shot down again. So that there is an engulf in itself, and you don't have to sell straight away on an engulf of a zone. You can wait for it to come back up to the decision that it isn't getting back into the zone, and you can sell there again. So there's nice profits to be had in just being patient and waiting for price to come back. So I hope this has taught you a little something about engulfs. Thanks for watching.